Coming up, South Africa scraps list of banned countries from which travelers were initially not allowed into the country. Zambia on brink of default as creditors set to reject relief. And Zimbabwe under investor pressure to end gold sales monopoly. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwagu. We tee off with intraday market numbers starting here in Africa where index movement looked mixed. South Africa's JSE index gained 0.22%, while markets in Nigeria are yet to pick up from yesterday's bullish run as the index lost 1.98% at intraday. The EGX30 in Egypt ended the week positive on Thursday by 0.18%. Kenya closed negative also on Thursday. Meanwhile, the Middle Eastern markets are closed for the weekend but ended the week positive on Thursday. The Qatari index posted gains of 0.92%, while Saudi Arabia's market was lower by 0.17%. In the UAE, Abu Dhabi's main index advanced 6.84%, while Dubai's index dropped 0.88%. And European stocks opened lower on Friday morning after President-elect Joe Biden was projected to win the battleground state of Arizona, cementing his path to the White House. Meanwhile, coronavirus has continued to rise across Europe, and that's where my conversation will start with Chelsea. Hello, Chelsea. Good afternoon there. Well, Germany has set a new record for daily coronavirus cases as at today, but automaker Daimler says it doesn't expect this second wave to derail the recovery in the global car market. Why is Daimler so confident?
It's been interesting this week. We've heard a lot of optimism from CEOs, from the finance minister, from other economists here in Germany as well. Many still are expecting the recovery we saw over the past couple of months to continue, despite the increase in cases and also the likelihood that these lockdown restrictions will remain after the anticipated end at the end of this month. So the coronavirus situation is clearly still quite severe here, but Daimler is still feeling quite optimistic about the future. We heard from the CEO yesterday that he still does expect the recovery and particularly the auto market here in Europe, also in China and the United States to maintain over the next couple of months. So clearly not anticipating any major shutdowns that would impact, for example, production or also the closure of dealerships that had hurt sales of vehicles earlier in the year. Whether that actually will pan out, it's going to be a bit of a question. Of course, a lot of the strength right now is coming from China, which has a much better control over the virus right now. So they aren't seeing as many disruptions to daily life. So I think that's a big part of the confidence that we're seeing from automakers like Daimler. But even as the CEO is signaling this confidence, they also are still preparing for severe cuts to their business. So they announced yesterday that they were going to take some full-time employees and cut down their hours and make other changes to help save some costs as they still are stocking up as we head into the next few months.
And after 8 years of talks, a group of Asian countries are set to sign the world's largest trade deal on Saturday on the sidelines of this year's ASEAN summit. What will this deal mean for global trade and, of course, the EU in particular?
It's definitely a major development for the global trade landscape. This will bring together a lot of the world's largest economies. This is really an effort that's being led by China, but Japan, Australia, a lot of Southeast Asian countries like Indonesia, Thailand are also going to be part of this. The trade region is expected to cover about 30% of global GDP, so it will be a powerhouse. And the main goal of this this trade region is to decrease barriers to trade and integrate these countries and integrate this region better. So, for example, over the period of a couple of years, we're likely to see tariffs reduced significantly and rules aligned so that trading can be easier among these countries. What this means for the global trade outlook is really that there's a lot of developments that are excluding both the United States and Europe. So as we see China really going forward with developing this massive trade region, it's going to put Europe and the U.S. Sort of on the outside of what could be a very important trading bloc going forward. So on the one hand, Europe in particular would benefit if this trading bloc helps revive some of these economies in Asia. But it is geopolitically, a bit of a blow that a lot of this power is now being centered around China and the Asian bloc without Europe really being part of it.
In the meantime, G20 policymakers are set to discuss details of a plan to offer debt relief to low-income countries hurt by the pandemic. What are investors expecting?
Investors do expect to see a deal out of this G20 meeting. So the rules of this new debt relief program are expected to be finalized today. The G20 had already last month agreed to a 6-month suspension of debt for many countries, but the rules that they're working on today are expected to be broader. It's supposed to cover more than 70 countries who in some cases really need this debt relief because they have high debt burdens and are now struggling to cover some of the cost of the pandemic and the declines in business and tax income, all of these things that we've seen as a result of the pandemic. So it's very crucial for a lot of these countries to get some form of debt relief. The big question is really if China is going to join in. China has really emerged as the main creditor to a lot of low-income emerging market countries. It holds about 60% of the debt of the lowest income countries in the world. So whether it gets on board with these rules coming out of the G20 is a major question. But the other big outstanding question is if private creditors are going to join in on this as well. So obviously we're seeing multilateral organizations, we're seeing governments join in this effort to reduce debt for countries. But whether these private investors, many of whom are based here in Europe, are based in the United States, will also join in is really going to determine how successful these efforts are.
Well, right, Chelsea. Well, the coronavirus pandemic has continued to ravage the whole world. I can only say, be safe and enjoy the rest of the weekend. And in the UK, the clock is ticking on a Brexit deal with a summit of EU leaders on 19th of November, now seen in Brussels as the final deadline for a draft Brexit deal, though unsurprisingly, negotiations are expected to go to the wire. Let's talk to Juliana, our London correspondent. Good afternoon, Juliana. Back to you again. Well, you talked to me about Dominic Cummings' resignation in the morning. However, he told BBC rumors of him threatening to resign are invented. Do you have more details on this?
Well, it's a huge topic of discussion here in Britain, and anybody that's familiar with the British tabloids should know that they'd be lapping up this story, and they certainly are. Dominic Cummings has now been dubbed Dominic Goings, and although we haven't had an official announcement, it's pretty safe to say that he is out. He'll be out before Christmas. Senior government officials, senior aides in Number 10 have been commenting quite publicly, which is a surprise because most close allies of Boris Johnson do tend to keep things under the whim. So the fact that there have been so many leakages of this information to the British press means that it's pretty much a done deal. Dominic Cummings was Boris Johnson, the Prime Minister's chief political aide. He was at that helm for about 16 months. A pretty controversial character. And you can just see that from the reaction of senior Tory MPs, MPs from the opposition and parts of the British establishment. They definitely felt that he was a bully, a tyrant, wanted to get things done his own way. Some would actually even call him weird. And Boris Johnson has been trying to change the image of his party. He wants to be considered a one-nation conservative, and he hasn't really been seen like that over the past couple of months. Of course, he won that overwhelming victory last December, but his handling of the pandemic and the series of U-turns have really made people question whether or not he can actually sustain himself as leader for the next 5 years. And Dominic Cummings, as well as his chief communications advisor, Lee Keynes, who resigned yesterday, seem to have bared the brunt of this bad reputation. Yes, Dominic Goings potentially out before the end of the year. And there are several questions remaining as to whether Boris Johnson can last for 5 years without him.
Now, so tell me, what's driving the market this intraday? Is it Cummings or Goings, alleged planned resignation, or the Brexit jitters as EU leaders set to meet?
Well, there has been a slight pickup on the FTSE All-Share at intraday. The FTSE All-Share is up by 0.01%, the FTSE 100 down by 0.04%, but there has been a pickup from the FTSE 250. That's a domestic market by 0.12%. No surprises that the biggest leaders on the FTSE this afternoon are Rolls-Royce and IAG, the parent company of British Airways, and that's because of the COVID-19 vaccine news. They're still reaping the benefits from that optimism, and really that's what traders in London are trying to balance, the optimism and the reality. Yes, we could potentially be seeing the beginning of the end of COVID-19, but the reality is hospitalizations and positive COVID cases and deaths are steadily rising here in the UK. Yesterday, we had over 530 deaths of COVID-19. We had over 33,000 people test positive for the vaccine. So it isn't looking great. And I think that's really what's weighing on the mind of investors at intraday. Just very quickly, in the currencies market, the pound up on the US dollar by 0.45%, up on the euro by 0.29%, and up on the Japanese yen by 0.37% at intraday.
And I guess it's been a roller coaster week for all of us, with England still on lockdown. Lead us into next week. What should we expect?
It has been a roller coaster week. I think we're still all recovering from the monumental fallout from the US presidential election. But I think next week it's definitely going to be domestic focused. Again, I'm sure over the weekend you'll be seeing a series of headlines coming out of Britain about this Downing Street civil war. I don't know if anybody's familiar with a soap called EastEnders, but they're certainly calling it the West Enders here in Britain. That's got a lot of tabloid following. And then, of course, Brexit. You spoke about that just before you crossed over to me. That's a huge issue of main concern. We've got less than 50 days, lots of government agencies, lots of business representatives have been speaking out, just saying we're just not ready. The British industry is not ready. What we're going to be expecting at Dover could be days and days and days of pile-ups of lorries because people are just not prepared. COVID-19 has really scuppered much of the discussions. Michel Barnier, the EU's chief negotiator, has been in and out of London over the past couple of weeks trying to crack that deal with his UK counterpart, Lord Frost. But there are significant issues that remain, one of them being fishing, Britain's fishing waters. They don't seem to be able to get an agreement on that. Level playing field governance. There are major concerns. And of course, the internal market bill, which is that piece of legislation that seeks to rip up parts of the international treaty, which is the withdrawal agreement. So there are loads of issues. And I think next week as well, a lot of the opposition party will be looking at the data coming out of COVID-19 to see whether or not this 4-week lockdown that we're in the middle of was worth it for the economy.
Well, Juliana, I guess the lockdown has forced you to work from home. So while we say, thank God it's Friday, I want to say, be safe out there, right?
Absolutely. Thank you, Chimmy.
You're welcome. Now, stocks in Asia Pacific were mixed on Friday as coronavirus cases continue to surge in the U.S. dimming optimism from positive vaccine news. Mainland China stocks saw losses by their close. The Shanghai Composite declined 0.86%, while the Shenzhen Component dipped 0.27%. Hong Kong's Hang Seng Index closed fractionally lower. In Japan, the Nikkei 225 shed 0.53%, while the Topix Index fell 1.33%. South Korea's Kospi, on the other hand, added 0.74%. Meanwhile, shares in Australia declined, with the S&P ASX 200 down 0.2%. And U.S. stock futures were higher early Friday morning as Wall Street continues to grapple with the rising number of coronavirus cases and its potential economic impact. Dow Jones Industrial Average futures traded 119 points higher. S&P 500 futures and Nasdaq 100 futures also traded in positive territory. Let's take a break. We'll be back in a moment. Just stay with us. As U.S. President-elect Joe Biden prepares to take over the White House in January, many are hopeful that his presidency will boost ties between the African continent and the United States. Over the last 4 years of the presidency of Donald Trump, there has often been a widespread perception his administration has had little direct interest in African affairs. Will that change with the administration of President-elect Joe Biden? Founder and Chief Narrative Officer of Clio's Advisory UK, Ted George, will be answering this question and more. Good afternoon, Ted. Good to see you. Thank you for joining us.
Hi, it's good to be back. Thank you.
So what difference are we likely to see between the administration of President-elect Joe Biden and that of President Donald Trump?
Well, I think the interesting thing is that I think Biden will certainly be popular with some Africans. But I think just like in the United States, in Africa, opinion about Trump is divided. There are some who will be happy to see Biden elected, but I think there are others who like Trump. They like the perceived image of a strong man taking on the corrupt political elite. And they do like his strong stance on China. He's very much been open, aggressive about the power of China. And if you bear in mind that, most of the mobile network in Africa has been installed by the Chinese, you can understand why. So I would expect that actually there will be many things which are similar about the Biden administration. The US cares about Africa above all because of security. So I think we'll still see a lot of security support, just as we did under Obama as well. But I think also there'll be a real push to try and get more in terms of economic cooperation. The Trump program actually had Prosper Africa, which is about boosting economic development and more trade ties. That followed on from the work of Obama and actually from George W. Bush. So I think a lot of continuity in terms of what they're trying to do, but I think the tone of Biden is going to be much more diplomatic.
And U.S. trade with Africa has languished in recent years. Could a Biden presidency deliver a step up in trade and investment by U.S. companies in Africa?
Yes, and I really hope so, because the reality is actually U.S. trade with Africa has languished in the last 10 years. Exports from the USA have fallen by about a third to Africa in the last 5 years, and imports from Africa by 2/3, from 90 billion to around 30 billion now. And this reflects the fact that the US is producing shale oil and gas. It imports a lot less hydrocarbons from countries like Algeria, Nigeria, and Angola. But it also shows the lack of actual diversity of the trade relationship. The US is number 5 now as export partners, below India and certainly below China. But I think an important thing is under Trump, there was actually the renegotiation, the extension of the U.S. export-import baggage mandate. It has a huge coffer. It wants to do a lot more business with Africa. And I think under Biden administration, we're going to see them really pushing that idea of let's see if we can have more more American investment and more trade flows with Africa.
And the Biden administration is expected to have a more multilateral approach to foreign relations than Trump's. How will this affect Africa?
Well, I think definitely we expect the Biden administration to be more multilateral. The immediate effects, we should expect that the US will resume funding for the WHO. That's essential during the global pandemic. Maybe Biden's administration will be more generous with the US vaccine that they've developed and give more doses to countries in Africa earlier. I think also we'll see the rejoining the Paris Accord, the climate accords, and that's essential. I mean, climate change is the biggest threat facing Africa. Still, over half the population gets its livelihood from rain-fed agriculture, and we've seen the impacts. But I think maybe the biggest opportunity is when it comes to the Africa Continental Free Trade Agreement. I think the US could be at the forefront in actually building this new kind of infrastructure of Pan-African trade and also, boosting trade volumes. So I would very much hope to see a much more engagement when it comes to multilateral organizations and maybe some meaningful support from the US behind the AFCFTA.
Ted, we appreciate your time on the show.
My pleasure.
And gold mining investors are pressuring Zimbabwe to change a law forcing producers to sell their output to the central bank, which part says they're in local currency that's worthless outside the country. The law is making it hard to raise capital for investment projects, according to B2 Gold Corporation and Caledonia Mining Corporation, which are considering acquiring assets in Zimbabwe. B2 Gold Chief Executive Officer Cliff Johnson said the Canadian company has held talks with the government about changing the rules to unlock investment. And Zambia might be Africa's first nation to have a sovereign default, as its $3 billion Eurobond holders are expected to reject a government request for a payment holiday. Zambia is due to pay a $42.5 million coupon on one of its $3 billion denominated sovereign bonds when the 30-day grace period expires at the end of today. A meeting is scheduled in London today by Zambia's Eurobond holders amid hopes that the government will get a payment reprieve until April next year. And South Africa has scrapped the list of banned countries for which travelers were initially not allowed into the country. Speaking to the nation, President Cyril Ramaphosa announced several measures opening up the economy further, but appealed to citizens to keep adhering to anti-COVID regulations. He also announced that from the 25th to 29th of this month, 5 days of national mourning will be observed in honor of those who died of COVID-19 and gender-based violence.
The president's announcements to open up the economy and international travel further came with a plea for continued adherence to the COVID health safety regulations to avoid going back to harder lockdown.
Wearing a mask every time we leave home is far, far better than having a second wave. It is also far better than a return to lockdown and better than having to shut down our economy once again. One of the leading pharmaceutical companies in the world, Johnson & Johnson, has entered into a preliminary agreement with a local company, Aspen Pharmacare, to manufacture and package its candidate vaccine. Aspen has capacity to manufacture 300 million doses of the candidate vaccine at its Nelson Mandela Bay plant.
As expected, the aviation and general tourism sectors are happier and hopeful something could be salvaged of the business year.
We certainly welcome the announcement by President Ramaphosa last night to open the borders and effectively do away with the high-risk list. And it really enables us now to start looking at really realizing potential for the full recovery of the aviation, travel and tourism industry. So it's very good news for us.
It will take long to fully recover, but immediately once everything is open, we are just already hoping to get bookings where we could fetch some tourists from the airport, and then also the hotels starting to be full. Then because also places are open right now, like Table Mountain, Cape Point, wine tasting, then we'll be busy. Yes, it will take time to recover fully, but gradually we will make it.
We are not expecting a flurry of tourists to come overnight, because the world is still kind of finding itself in terms of being able to have the confidence to travel outside there. But it sends the right signals to the world. It sends the right signals that tourism is open for business in South Africa.
Amidst all the hope is still the worry that opening up to international travelers could worsen the already worrisome COVID stats South Africa is experiencing today.
And with that, we draw the curtain on the program. We'll be back next week. I'm Chimeze Obi Iwagu.